There are many good ideas which never saw light due to lack of cash and capital, because cash and capital are the most two important element for any business or startup to grow. You don't have to give up on your business ideas and business startups. In that video, I will show you how you can raise up capital and how can you raise up funds to start up your own company. You will be so surprised at knowing how many ways you can raise up capital for your startup safely and easily. This is Sam Hesayed, your business coach again. Stay tuned and never go anywhere. The first way or source you can raise up capital for your startup is bootstrapping. The process of utilizing personal saved up funds or funding from friends and family is known as bootstrapping or self-funding. Obtaining funding from family members and friends is a unique way to kick off your startup. Friends and family members are usually flexible when it comes to servicing your loan, when it comes to servicing your debt. They are more flexible, much more flexible than other external sources. So if you approach the right friend or family member that supports your idea and who is too much enthusiastic about your idea, you can get some, if not all, funds you require to start up your business. But the problem here is bootstrapping doesn't work for large businesses. It is only for a small startup. It only works for a small scale enterprises. The second source available for you to raise capital to finance your startup is crowdfunding. Technology made it easier for people to share their problems on an interactive social platform. Crowdfunding platforms are basically set up for individuals to pitch their business ideas, to talk about their business ideas, or challenges to a community of investors or people willing to support their ideas or cause. So those are websites full of investors and full of people who are too much willing to help good ideas, good business ideas. But how it basically works is that an individual makes a business pitch on the crowdfunding platform. He shares his business model and its potential for growth. If the idea is bought by the crowdfunders who are in that platform, those crowdfunders, if they are too much interested in that idea on the platform, they will make a pledge to support his business model, that business model for a startup. Okay, they will be able to support that business model publicly and share funds respectively to start up that business idea. The next source here is seeking angel investments. Angels are only in heaven. I might agree with you, but for businesses, angels are also on earth. Angels investors are basically people with a huge amount of capital. They have a huge amount of capital and they are too much willing to invest it. They want to invest it on what? On promising business ideas, new startup business ideas. Angel investors sometimes come together in groups to scrutinize business proposals, ideas, in order to select the perfect candidates to invest in. A good point here of angel investors is the offer. How can you make that offer? How can you show your business ideas? And in return, you can find a very big and good offer of mentorship alongside capital for a startup. So it is not only that you will get some capital to start up your company. No, you will also get some mentorship from those angel investors. But the point here, you must convince them. You must have a very good, promising business ideas first. The next source here is venture capital. Venture capital funds are managed by professionals that have a keen eye for seeking out companies with great prospects and ideas. They are investing in a solid business rather than an equity. They need big and good promising business ideas. Once there is an IPO or acquisition of the business they are partnered with, they will then pull out and seek other investments. A weak point of that approach is you tend to lose control of your business since you are given a large part of it to venture capital investors. So those venture capital investors will come and say, we are willing to finance your startup, but the point is they will be too much involved with that business, with managing the business. They have too much competence and experiences. So this is the weak point. This is the point that you might not like. You might lose a bit of control of your business because those venture capitalists will need to manage and will need to be too much involved with managing that business to make sure that the money they are investing, the money that they are giving to you will come back to them. The next source to raise capital for your startup is all about business incubators and accelerators. Businesses that are just starting up can access funds provided by business incubators and accelerators. The programs offered by them can be found in major cities across the globe. Slight differences separate the terms business incubators from business accelerators. What is the key difference between both business incubators and business accelerators? Business incubators basically nurture business, adopt business, while accelerators are only fast-tracking businesses. The point here is the aim of each group. Business incubators basically nurture businesses, and accelerators need to fast-track businesses. And there are many good points from seeking some capital from those business incubators and accelerators. Business owners will receive mentorship, not only funds or capital. They will also receive mentorship from those investors, from those incubators and accelerators. Connections can also be made with other startups. Those business incubators and accelerators can give you a chance to connect and communicate with other business startups and have some communications and have some ideas and knowledge. The next source is winning a contest. Another amazing way to source some funds for your company is engaging in competitions and contests. That will require some entrepreneur to showcase or pitch their business models against other competitors. So all competitors will be advised to participate in that contest. Everyone will showcase his business ideas to get some funding, because the winner will get some funds. The winner of that contest will get some funds. A contestant, you are required to present a comprehensive and detailed business plan if you are looking to win over other competitors. So you must have heard about competitions. Famous entrepreneurs have some business competitions to encourage those business ideas to come to life. In the process of participating in the contest, media coverage will be available to your startup. So that will give you much needed publicity for your business before you even start it up. So many benefits you will get from participating and winning that contest. Another way to raise capital is going for a bank and seeking for a bank loan. Banks provide financial backing on loans to individuals who approach them with a solid business plan. The business plan must be well structured to convey the profit forecast and estimated time of maturity. The financial provision of banks is in two forms: either working capital loan or funding. But seeking bank loans is a bit costly. You can know that you will pay interest and you will be charged some financial costs. The next source to raise capital is to get some loans from microfinance providers. Microfinance was set up to give access to capital to small-scale entrepreneurs that lack access to conventional banking capital loans. You know, conventional banks. If you cannot go there and approach them and get some loans, you can go to microfinance institutions. So individuals with poor credit ratings see microfinance institutions as a way out whenever they are out of favor by conventional banks. Non-banking financial corporations give out loans to individuals who seek loans without necessarily imposing any legality on them. Like what? Like conventional banks. So that means it is a bit faster and easier than conventional banks, which is a bit good. One more way to get some sources to finance your own startup is going to government programs. Government programs that offer startup capital are an excellent way to source funding for your business. You are required to submit a business plan that can be accepted by the grant committee. Once your plan has been scrutinized and approved, you will be provided with the funds to start your own business, your own dream. The process of scrutiny, approval, and acceptance will release the funds that you might need from that government. But it might take some time due to what? Due to some government bureaucracy. The last sources that I have for you to raise capital to start up your company here, some multiple sources like product pre-sale, selling assets, and credit cards. Product pre-sale is an amazing way of raising funds for your business, and this is happening through product pre-sale or before launching your products officially. This builds consumer confidence in your brand and allows you to size up the demand for your product before it is officially launched. Companies like Apple and Samsung adopt this procedure, allowing consumers to make pre-purchases and they pay before even the product is officially released. But that needs some confidence. So you will offer your product before it is launched, and people will pay and customers will pay before your product is launched. It is called product pre-sale. The other thing is selling assets. Doing away with assets in your possession that have high financial value. You might have some assets and you don't use it, and those assets have very big and high financial value that can effectively serve as an immediate source of funding for your startup. One more way is credit cards. Business credit cards are an instant source of funding. No businesses that incur heavy expenditure can utilize credit cards as long as they fulfill the minimum payment required. You don't have to clear all the bill. You can only pay the minimum payment required. So you can utilize those credit cards and you can manage your business and start your business through those credit cards. Well, that concludes our topic for today. I'm Sam Hillside. I hope you've enjoyed it, and until next time, see you then.